Hey guys, hope you're doing well out there. It's time to check in on the poster child of the AI rally, and that is shares of Nvidia Corporation higher by nearly 6% in the after hours on the heels of reporting their Q1 results, adding to your year-to-date gains of just a cool 92%. So the question has to be asked, does this company have the legs to continue to push up past a $3 trillion market cap, maybe even become the most valuable company in the world? Also, can you continue to see the same outperformance with a name like this that you have seen in the past? Certainly when we take a look at their Q1 results, for the fact that you have this company posting yet another quarter with their data center revenues surpassing the total revenues that they posted in their previous quarter, the answers to those questions certainly do become apparent. Now, you also got a 10-for-1 stock split announcement with this company, and the fact that they bumped up their dividend by roughly 150%. So you have a lot of things to like. Certainly a lot of it was priced in, but the fact that this company continues to just blow those expectations out of the water once again certainly does not disappoint. Now, revenue is coming in at $26 billion for this most recent Q1. That was good for roughly 260% growth year over year. And the fact that you have expectations on Wall Street continuously rising for this company, yet they continue to beat those expectations by roughly $1.5 billion. In terms of the non-GAAP EPS, that also coming in with a nice 54-cent beat with EPS of close to $6.12. In fact, the high-end estimate on Wall Street was $6.12. As we look ahead, this is a company that guides for their Q2 revenues to come in roughly $28 billion. Estimates again on Wall Street were closer to 26.84, despite constantly being bumped up. Nvidia coming in with those consistent raises and beats, both on their most recent quarter and the current Q2 that they are in. And for the fact that this company continues to beat their own expectations that they set, I certainly wouldn't be surprised if Nvidia posts a Q2 revenue figure at least at $29.5 billion, if not surpassing $30 billion. And so as you look ahead to Q3, your upside is maybe Nvidia posts a quarter of $31 billion. And then for Q4, maybe you get a figure closer to $35 billion. And so despite the fact that these growth rates on your revenues continue to look phenomenal, close to 100% and then 50% throughout Q3 and Q4, the fact that they simply could be higher, considering that Nvidia comes in with those consistent beats and raises. And so despite your forward price to sales looking expensive at close to 20 times, certainly if you can post a revenue growth figure north of 100%, that certainly would justify that high price to sales valuation just a little bit more. On top of that, the fact that you have the upgrade cycle for these Nvidia GPUs, their Blackwell GPUs coming in the back half of this year, those are expected to cost somewhere between $30,000 up to $40,000 per GPU. And the fact that you have companies like Google, like Meta, like Microsoft, and the fact that even Amazon announced earlier that they are waiting to pick up those new Blackwell GPUs and sort of holding off on their data center build out until those Nvidia next generation chips, and you still have such fast growing data center revenues, close to $22.5 billion for the most recent quarter, and the fact that maybe you can have upside in the back half of this year due to those accelerated Blackwell GPU sales. And really that is your upside with Nvidia, something that in my opinion isn't completely priced in at this point. Also, what we got was Q2 non-GAAP gross margins expected to be roughly between 75 to 76%. To put that in perspective, this was a quarter where Nvidia just did 78.9% gross margins. So while you will see a sequential decline on your gross margins, consider the fact that this is a company still expected to do mid 70% gross margin for the upcoming full year. And when you're expected to grow your revenues close to 100%, a lot of those revenue dollars flow right down to your net income. And we'll see that on to their statement of cash flows. Now, this is a company that did announce that 10-for-1 stock split. So keep in mind, fundamentally, while nothing will change with the stock, you can expect some more liquidity, in my opinion, will help out the employees at Nvidia and certainly will help out retail investors that maybe can't pick up fractional shares in their brokerages. And especially at $1,000 per share, that is a hefty price for retail investors. The other thing we got was a dividend bump up of roughly 150%. So keep in mind, while the dividend, nothing to write home about and still relatively small over at Nvidia, what you're hoping for is these consistent large increases on your dividends. And maybe 5 to 10 years down the road, you're looking at Nvidia as a dividend growth company simply because they have the cash flows, they have the cash on their balance sheet to continue to spit out large amounts of dividends that can continue to grow in the near future. So from their most recent Q1, all things looking good in terms of a revenue and earning perspective. What's even more impressive though is how good this company controls their cost. Despite growing your revenues at 260%, your cost of revenues didn't go up nearly as fast, and so you generated roughly $20.4 billion of gross profit. Last year, you were sitting at $4.6 billion in gross profit. So substantial tick ups on your gross profit. On top of that, your operating expenses ticking up by just about $1 billion. And so your operating income exploding up to $16.9 billion. Last year, you were just north of $2 billion. Similar story on your net income, just nearly 7xing from a year ago. The other thing to note with NVIDIA is the fact that this is a company now earning roughly $350 million in interest income. And that is actually a substantial tick up from same time last year. And that comes down to the fact that this is a company that just quarter over quarter added roughly $5.5 billion on to their cash and marketable securities. So the fact that this company is extremely well capitalized with roughly $31.5 billion in cash allows them to earn just a little bit more on their interest income. And certainly at a time where interest rates are high, that tends to bode well for a stock like this. On top of that, we balance out those $30 billion in cash and marketable securities by just $28 billion in total liabilities. So from a balance sheet perspective, you basically have nothing to worry about with this name. Now we pull down that $14.8 billion in net income. Again, substantial bump up from same time last year. We get to add back a little bit of stock-based compensation and some depreciation. We get to operating cash flows of $15.3 billion. Last year, we were at just $3 billion. So this is a company that's, unlike Intel, not spending a ton on building out their own foundries. Also, unlike your mega cap tech, not spending a ton building out data centers. And so a lot of that $15.3 billion operating cash flows gets to stay as free cash flow. And this is a company that really doesn't have a ton of use for that cash, at least organically. And so they're picking up marketable securities to the tune of roughly $5.6 billion and then buying back their common stock to the tune of $7.7 billion. So despite tremendous growth on your revenues and your earnings, this is a company that's just cash flowing and simply doesn't have a ton of use for that cash. And so they're doing their buybacks, they're paying out their dividends, and then they're picking up marketable securities. So this is your bull case over at NVIDIA. If you look ahead 5-10 years, if the gross margins stay somewhere in the 70s% and this company continues to be a cash flow machine, you can continue to expect those buybacks on those stock to accelerate. And as an investor, that allows you to hold on to the shares, on top of which you'll continue to get those dividends and expect that dividend growth. So the financials over at NVIDIA, like we expected, tremendous coming out of this Q1 and really expected to be tremendous heading into this Q2. Now, from a technical perspective, you basically have an elevator ride higher over the past year and a half. And certainly you have the ability to continue to push up with shares of NVIDIA. You're still somewhere in the middle of the range. You have the ability to push up, call it somewhere in the $1,100 to $1,200 a share. Post split, that would be closer to $110 to $120 a share. Certainly at these levels, I wouldn't be overly excited to step into shares of NVIDIA. In fact, if you have been holding shares over, call it the past year and a half to 2 years, these levels would be more inclined to take my profits. And on any major dips, call it any pullbacks, sub 800, even sub 900, you can look to step in. That would be a drawdown somewhere around 10 to 15%. And really in an uptrend, any major dip in a stock like this can be a buying opportunity, especially when you have the fundamentals supporting a name like this. When you have a 37 forward price to earnings, not wildly expensive, especially when you consider the growth that you're going to get on those earnings. Similar side on your sales, you're looking at 20 times a forward price to sales, but you could expect close to 100% growth on your revenues. And so from that perspective, the valuation over at NVIDIA, not as expensive maybe as it was even in its history. And so the valuation continues to support a stock like this, on top of which you have the expected bump up on your revenues and growth rates from the anticipated next generation GPU launch later this year. And so while I wouldn't unload a full position, certainly I would look to step into shares of NVIDIA on any major pullback, let's say beyond 10%. And those are shares you can continue to hold at least for the next 1 year, where I see this one continuing to outperform at least your QQQs and a lot of other names in the market. You likely won't see the same type of outperformance that you have seen over the past 1 year, but you can expect, at least in my opinion, the ability for this one to push past a $3 trillion market cap as early as the end of this year. That was my take on shares of NVIDIA, one that continues to show tremendous promise, at least over the next 1 year. And certainly if you can have the anticipated revenue bump up from your Blackwell GPU release later in this year, and you have the backlog from your mega cap tech sort of holding off on upgrading for their NVIDIA next generation chips, I think that is your upside, something that isn't fully priced in to the stock just yet. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.